Hey guys, this is Mikas coming at you with another market update video. Today is May 18th. It's officially Monday, so the beginning of the trading week for me. Today's video, or this video, is just going to be following up on the bullish scenario that I was looking out on yesterday as well. So yesterday we set out, we decided that, the three corrective waves had been complete, and we'd started our new 5-wave impulse from the fourth to the fifth leg of this bigger 5-wave Elliott pump since the bigger pump is pre-corona. I mean, it's from the corona dump. So looking at the smaller setup that we have here, yesterday we were working on the third wave. We weren't sure where that was exactly going to land. I did call it here just because we did put in that top. However, after a slight correction and a drop to the 0.382 level, we did see that pump back up here to about the 1K. I mean, about the 10K region. Barely missed this zone, but I was thinking that it was going to bounce somewhere around up here. It barely broke our previous high, which makes sense. So a bounce anywhere in this area was to be expected. So that is going to be what I'm going to be calling the top of the third wave. And then we called, the pullback of the corrective wave, or the fourth wave, down to somewhere around this trend line, maybe the 0.382 level, if the bulls really were in control. And as you can see, we have been consolidating and closing candles above that rising trend line. So that's looking pretty supportive. We did have this huge, so I'm going to call that, the bounce down here. And it is still valid because it isn't, engulfing the entire second wave or the first wave. So that is totally okay. I didn't enter a trade because I do not trade on the weekends, but if you were watching this and if you were looking, for an optimal entry, you got a perfect bounce off the 0.618 level, which would have been an optimal entry. I think yesterday when I drew up my buy zone, it was, between the 0.5 and the 0.618 level. After doing a little bit of more analysis after I made that video, I decided to break it up. I made, a buy zone up here for a more conservative, pump. So like, for example, off of this dump, we dropped right into this buy zone. So that could have been a quick flip up to this sell zone, or in the vicinity of that, followed by, if you had an entry here and you made another entry here, you would have probably averaged out somewhere in the middle, which is also, a very good entry. So right now we are working on that way to the upside. I am going to review a couple more things, a little bit more of an intraday situation or a setup that I think, I think the bears could push price action a little bit further down. Maybe not candle body closes, but we might see a couple more, wicks to the downside. This will also come into sentiment. We'll have a look at the sentiment a little bit later in the video. But let's just have a look at what our fib levels are saying. So let's get rid of this one for right now. I'm going to leave this buy zone because that shows our entry level there. But now that we have officially put in a third wave top, let's try and draw a fib retracement from the bottom of the second to the top of the third to see what's happening. So this is a bullish scenario here. So you can see that price action after the we completed that third wave came down. It did touch this 0.236 level, which is kind of like a last, which actually, since it bounced off of there, which coincides with the 0.618 on that bigger retracement, that is indicating very strong bullish support at around 9.4. And as you can see, we've kind of been playing in between the 0.5 to 0.618 level. We're kind of consolidating in that area. Since we haven't had an immediate pump off of that, like we saw with the touch of this 0.618 level on the bigger retracement, which is a 0.236 on this level, that means there's a little bit more of competition between bulls and bears. However, this is technically a buy zone. As we should be expecting a measured move technically with our extensions, from the third to the fourth. This is actually a bearish scenario. So let's do the bearish scenario first. All right, so if this is in fact a pivot off the 0.618, no, it's not going to work because I need to do a different fib retracement. Let's actually look at the bearish scenario first. So let's draw our fib retracement from the top of the third to the bottom of the fourth. Right, so this is what the bears are looking for entry levels. So you can see right now the 0.5 and the 0.618 level are fall in a very similar range to the bullish perspective, and that's probably why we're squeezing in this area, just because there's equal competition on both sides. So it'll be interesting to see who comes out on top. However, I am maybe leaning a little bit more bearish on this since we haven't broken past the 0.5 level, which is the biggest marker of control in the market. So it looks like we are working down into that 0.618 level. So it'll be interesting to see if we break out of this blue volume support. Also, this trend line, closing below this trend line, I think we could potentially maybe see a fake out if this is in fact still controlled by the bulls. Maybe see a fake out, come back in, and then continue up for that fifth wave. But technically, let's look at what some potential targets could be if the bears do take over, as I feel like that would be a pretty good bullish entry point. So if we do say that this was the point of reversal, we're drawing it on the whoops, my bad, I clicked the wrong mouse button. So let's say that is the entry level. So we're aiming for that 50 to 61.8% region, which actually lines up quite nicely with that second buy zone that I have drawn in already, which is around that 0.618 level on the bigger retracement, which lines up nicely with the 0.236 that we saw on the other retracement that I was drawing. So this is definitely this is still a valid entry zone. I might even drag it up a little bit, up to that 9450 region. So that I'm going to be locking that in. I will be looking for entries after we bounce. The lower the better. So if I can catch a wick, but that fully realized target is down here at around 100%. If the bears did take over, I would look for candle closures in this region to really flip my bias towards the bears. But I would want to see that fully realized, as that would invalidate our fourth corrective wave. Anything making a new low at this point would invalidate this fourth low and would beg for a reconsideration of measured moves. But right now I do think we can see a fake out or wicks down to this level, which might be a potential juicy entry for an extension to the upside. Let's get rid of these. Let's have a look at more of a bullish scenario. So if we drag an extension from the bottom of the fourth to the top of the third, we are technically rejecting off of that 0.5 level, so that is slightly a little bit more bearish than it is bullish. I would like to see us, wait, is this reversed? Oh yeah, this is reversed. I was like, well, that doesn't make any sense. So yeah, once again, let me just redraw this. Actually, I don't like how that flips on me. I'm going from the fourth to the third. Yeah, okay, cool. So you can see we didn't manage to break through those 0.5. We have been using this 0.618 as support, but as long as we're closing above this, I'd say bulls still have a chance. But as soon as we start closing below here, this lower green box is potentially a target. However, if you are a little bit more on the risky side, this bottom green box is also, I guess, lines up nicely with that 0.618 level. I wouldn't extend it up to the 0.5 level here, as we haven't broken above yet, so it is still acting as resistance. I would also look for any kind of rejection off the 0.236 level, as we are technically below that. So maybe we'll get a wick up. I could see that shifting sentiment, getting a lot of FOMOers in. It might be a good scalp, but I have a different setup for that. So I will be watching the 9700 region. I want to see candle closures above that before I do start being at least bullish for the short term, or until we complete this fifth wave impulse. I don't really like going. I mean, we can go into the 15 minutes to see if this corrective wave is technically done. These do get a little bit confusing though on the smaller time frames, just because it tends to be a lot more jittery. So we have to have a third. So our B wave has to be in the direction of the original trend. So it would have to either be here. That wouldn't count. That's not. Yeah. I mean, so technically I would be more comfortable calling this the B. So we could technically, see a C wave down into this 9400 region, which would be nice. It doesn't necessarily, on these lower time frames, that could be a couple candle bodies, but on the bigger time frames, it might only show up as a wick. So I do potentially see that as a possible outcome, is returning into this green buy zone, which would be, in my opinion, a pretty juicy long entry, and I will be looking for that, as long as momentum is not overly in the bears' favor, because we could also just get a dump off this region. But I am going to be looking for a wick or movement on the smaller time frames into that region. Going back out onto the hourly, that would complete this third to fourth pump here, not to be confused with this one over here, because we did complete that 3 to 4. Now we're looking at this 3 to 4, which is of a smaller level than the bigger. This is why Elliott wave theory gets confusing a little bit. It can be at play at so many levels at the same time, so you just gotta make sure you keep them straight. So yeah, I will be looking for longs entries somewhere around here and here. I wouldn't necessarily be looking for short entries just now on the higher time frames. Obviously on the lower time frames, that's a different story. If you're looking to scalp moves to the downside, then there's better ways of doing that. But for right now, I am calling this 3rd to 4th wave complete, if not almost complete. Maybe one more wick to the downside, but I would watch for that. But I would be more hesitant on that short move. And then after that, pending reassessment, depending on the daily close and everything like that, we could probably get another take at the 10K region, where I would probably be looking to take profits. I mean, we can draw in an extension. I mean, that's not totally right, but let's say, we don't know where this is going to bounce. So if let's do it off here actually. So from here to here, and let's say this wick, or around this wick, is in fact the first, that is the turnaround point, the pivot point. I will be looking for take profits in the 9.7 region. If we do get an entry down here, the 9.7 region, between that 9774 and 9885, probably look for that higher level here, the 9858, as that probably lines up. This is all in volume resistance here at this point, but that lines up nicely with the being right below the peak over here. So I could see a wick up to there. A little bit more. If we are in fact going to pivot off of this trend line, we can also drop some potential targets for that situation. Let's say we, bounced off of. No, I wouldn't be confident. I would say this is probably the safest way to go, is look for, some slowed movement in this area. Maybe we come up, test it once, get rejected. It's hard to break these on the first try. Test it once, get rejected, and move back down into this region, come up for a second or third try, and then break through it. But it'll be interesting to see what happens with this trend line pushing us up into this region. That is forming a little bit of a natural ascending triangle, so we could potentially, get a natural break to the upside from there if this trend line decides to hold. But all of these things are up to interpretation, shifts in sentiment at the moment in time. But long story short, I guess, is I will be looking for a safer long entry. If we get a wick down to this side on the hourly time frames, on the minutely time frames, that might be a couple actual candles. However, it is very possible that we get squeezed in that 50 to 61.8% region by this natural trend line. That's why this buy region is here. If case that happens, that's a potential entry as well. Sell zones are going to be, I would say your first take profit should be somewhere around the top of this, the bottom of this peak, and then technically fully realized target should be somewhere up, maybe on that top trend line if you're really feeling risky, but anywhere in this region, I would say maybe right up here with volume support. Volume resistance around 10.1K would be a good place to fully realize your profits. Let's have a look at what the sentiment is saying. This is on the hourly. Let's zoom out on the 2 daily here. So you can see shorts are up 19.5%, longs are only up 3.3%. That's saying that a lot of people are leaning a little bit more bearish. Even though we did have that huge short squeeze that did liquidate quite a bit of positions, those shorts climbed right back up, which is telling me, maybe the bears take this for a little bit of a ride, pushing us into that buy region, maybe causing some FOMO, causing shorts to rise even more, as that is apparently the very hypey move right now, putting us in prime, location for another short squeeze. I think a couple more longs need to be liquidated, so maybe we'll see a massive wick to the downside, so be careful of that. But generally pretty equal, I'd say, down here. Maybe a little bit, yeah. I could see this turning into another bear trap, as this was an insane, a very quick rate of regaining shorts. So I could see another, take of the upside, which would probably coincide with a move up to about the 10K region. So I'm interested to see how that played out. I'm glad that, this call, the top of the third wave kind of came in pretty accurately, and, the fourth wave did, it is closing above that trend line, which we did predict with a wick down to here, which is where I'm going to call the fourth pivot point. So now we are looking for that general uptrend. This is the bullish scenario, so we are looking for that, fifth wave extension. We could even draw, we said where this might still be part of the 3-wave corrective nature, because I find it hard to be able to draw a B wave in here somewhere. So I do think there is one more take to the downside, but I wouldn't use this strategy necessarily for that. I would use a scalping strategy to try and catch that down to this region if you're looking for a short here, and then off of there look for a scalp to the top side, or even like this a little slightly longer term format to look for an extension up to at least the 9.7k region, somewhere around here, and then by extension to 10k. But that's all hanging on sentiment and analysis in the moment when we do get to this region, as we could easily shift to a bear scenario as well. Although I do think there's a little bit more upside movement to be seen. All right, thanks guys. Let me know if this helped. Make sure to like and subscribe.